Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very good day of trading and a very beautiful weekend as well. And in today's markets, guys, well, we started off the week in a little bit of a bumpy fashion. Most of all the companies in the S&P 500 were red today, unfortunately, but we did have some outperformance, especially in some of the big tech names. Now, everything this week, guys, is going to revolve around a very heavy earnings week. Over 110 different companies in the S&P 500 are reporting this week, and a batch of them reporting next week as well. And next week is going to be very heavy in terms of our big tech earnings. So looking forward to all of this action. It should free up a ton of different trades, but this week specifically, we're going to have some decent releases from tomorrow, looking into GM, 3M as well, Raytheon, Lockheed Martin, Texas Instruments, and one of our semiconductor names, and Enphase, right? So those are going to be the ones that I'll be kind of focusing my trades on tomorrow. And we're going to be doing obviously after earnings trades, guys. I'm not really going to be doing any more pre-earnings trades because this earnings season could be very, very volatile. But in the event we get some big price drops on some of my favorite companies out there, we could have some very good opportunities for some trades. And of course, I will keep you guys updated. We will take these earnings releases one day at a time, of course. The biggest day undoubtedly is going to be Wednesday. Wednesday, we have Tesla and Lam Research, as well as Coca-Cola too. So it should be a very, very interesting day in terms of price action across many different industries. Now, in today's video, what we're going to take care of is going to go through our major technical analysis on our stock market indexes right here, see how different sectors are comparing amongst each other. Thereafter, take a look at the technical analysis on our major big tech names and see, although they supported the market today, are they still looking good, or is even big tech in potential jeopardy of having a little bit of a pullback? And then lastly, guys, we're going to take a look at my portfolio for just a few of the trades that I opened today. Full disclaimer, I'm saving most of my buying power for all of these beautiful earnings that are coming out, which could open up a lot more trade opportunities. The last thing we want to do, guys, is chase names while the S&P is at all-time highs. QQQ is very close to all-time highs, and a lot of our favorite companies as well could be at all-time highs. So we're not in the business of chasing the market, guys. We need to wait for the market to come to us, wait for our favorite names to come to us. That is usually when we get the best risk to reward. So let's move into the details of the day, guys. SPY down about 0.16%, the QQQ up about 0.19%. But when I show you the heat map, you'll see it does not look very good, right? So the only outperformance on the day, well, NVIDIA coming up about 4.14%. NVIDIA cannot be stopped even with the entire market red. It finds a way to end 4.5% or 4.25% almost in the green. Google and Apple also having a decent day, but that is pretty much where the bullishness stopped, guys. Netflix putting in a new all-time high, have to give them a special mention as well. But everything else in the market, guys, really coming down hard, especially healthcare and your banking sector, some of your loss leaders, and the bottom half of the market not responding too well. And that is a byproduct of the big sharp increase in yields that we saw not only on the Friday session, but today as well. And we'll get into that a little bit later in the video. But these interest rate sensitive sectors, guys, definitely not responding very well to those very rapid increases in the longer term yields. Now, taking a look at the one-day relative performance here, guys, you can see that only technology, guys, led to the upside by NVIDIA, Apple, Google, and Netflix. Only technology was the winner of the day. Everything else coming to the downside, and real estate getting hit the hardest because of that rapid increase in yields. On the 1 week relative, where do we stand? Well, utilities still an outperformer, financials, basic materials, and tech and real estate still in the green, but you can see very mixed market recently, guys, which just goes to reiterate my point, that the bulls perhaps are getting a little bit tired right now. We've had 6 weeks of nonstop green on the SPY and roughly about 6 weeks as well of nonstop green on the QQQs. So the pullback could potentially be occurring at any given time, but it's a good thing though, the bulls have tons of space for it, right? So let's get into the technicals right away. So moving into the SPY, down about 0.16%, but we know the bulls have tons of space. Keep an eye right here. This is your daily high or low, 578.49, guys. This guy right here, in the event we flush this level over the course of the week, you will lose your daily uptrend, be into daily downtrend consolidation, and moving into weekly consolidation as well. Now, the first line of defense is obviously down here at the 574.30. Prior resistance is going to be further support. But now on the weekly level, guys, if we really start flushing because earnings are bad, we get some bad data releases, stuff like that. Even though we don't have much in terms of data this week at all, much before the Thursday session when we get the infamous manufacturing manufacturing report and the services PMI, we don't really have anything else that's a big market moving event, except for a lot of the Fed speakers, right? And the Fed speakers recently have been a little bit mixed. Now, a lot of them are happy with the fact that the Fed has cut 50 basis points already, but a few of them, especially Mr. Kashkari, who is speaking today, hinted at the fact that the Federal Reserve may need to slow down the pace of rate cuts in the foreseeable future because they haven't been getting any worsening data. We know that they did a jumbo cut of 0.5% just about a month ago at this point in time because they were worried about the decline in the labor market. Not so much inflation anymore being the top concern, but it's really a question of whether or not the labor market is healthy. Is unemployment starting to really rise rapidly, or is it under control? Well, we got that one bad report in September, which hinted that everything was kind of unraveling on us. But since then, every single report has been fairly good or revised to the upside. So a lot of the Fed members are kind of changing their tone and opting for a more moderate pace of rate decreases, rate cuts, essentially, right? But we have to keep our eyes open for this one, guys. This is going to be a big one, right? They're all also saying that they will still remain data dependent. So even though they're saying things right now, they also acknowledge the fact that in the event the economy really starts taking a dive towards the deep end type of thing and unemployment starts rising rapidly, they will be ready to respond by accelerating the pace of rate cuts. So same as always, they always leave the door open, right, for either or situation. So I'll be monitoring these closely, but I'm not expecting too many big changes over the next couple of days. The biggest report is going to be on the Thursday session, of course. So that being said, in the event that everything is unfavorable and we lose the daily uptrend, go into daily downtrend consolidation, well, we'll just be looking at that point, guys, for a weekly higher low. At this point, anything above 537, 538. This guy right here, just looking for a weekly higher low for further continuation. And the most important level, in my opinion, guys, is going to be 565 down to roughly 560. The prior resistance here, which is now going to be support, and the 12 EMA lining up perfectly almost for that confluence area for a little bit of healthy weekly pullback for now. Now, moving on to our QQQ. So QQQ is largely the same setup, right? Even though the QQQs were green today, QQQs are in a daily uptrend, but we're very, very, very tight recently. The daily higher low is right here, the low of last Wednesday, 487.69. If you do not make a new high and flush that level to the downside, you guys know the drill. Daily downtrend is underway. And at that point, we will once again be looking for weekly consolidation, anything pretty much above 448, looking for a weekly higher low for possible further trend continuation. My specific focus will be on this area right here, 482 down to about 475. That is the area of confluence. Prior resistance is now current support. We do have confluence with the 12 EMA. So as of right now, we're just expecting the daily uptrend continuation, but just setting the expectation in the event we kind of unravel here, just letting you guys know what we're looking out for on the longer term timeframes, because so far the bulls retain full control. Moving into XLF right now. Now, this is some daily consolidation, right? 0.8% to the downside. We have a very nice daily uptrend underway, and the bulls are working with an absolute ton of space after roughly 8 days of rally. Anything at this point above 45, just looking for a daily higher low for possible further trend continuation. If the bears pull back too much and take away all of this momentum, set up for the lower high into lower low daily downtrend conversion, just understand what we're looking for on the longer term timeframes here, guys. It is a nice weekly uptrend currently. We would just be looking for the weekly higher low for possible further trend continuation. And we're going to have a very nice area of confluence on this chart as well. All of your previous weekly resistance right here should be newfound support, and the 12 EMA is curling up into that area. That is about 45.89. So we'll keep our eyes peeled, taking this one day at a time. So far, the bulls are in full control right now, but I'm just setting the context, guys. In the event you see a large move down, we know what to look out for. And as always, guys, I'll be here with you every single day of the week, so we'll be able to watch this happen in real time. My favorite trade, by the way, on XLF right now for a little bit of trend continuation has to definitely be Berkshire. Berkshire looking quite decent, I would say. Resistance here, newfound support, the moving averages, looking for the daily trend breakout, higher lows, and move a little bit higher. Just continuation of a nice weekly uptrend. It's a slow mover, it's Berkshire, but the chart is looking pretty good in my humble opinion. Moving on to healthcare right now. Healthcare suffering today, and unfortunately, the bulls had the attempt, right? So we knew we were in the context of a daily downtrend. The bulls put in a very nice engulfing move. We were waiting for the higher low, into higher high daily uptrend conversion, put an end to this weekly downtrend decline. But unfortunately, the bulls came undone today and set a new daily downtrend. So now, unfortunately, guys, the weekly lower highs are confirmed. So down, right? Lower high, and now possibly even looking into lower low. We have one last line of defense that we're quickly eroding, which is the 150 mark. Your prior resistance should now be current support. In the event we just flush through this as if it's not even there, continue the daily downtrend, and continue the weekly downtrend as well. Just keep an eye on the lower level down here, guys. 147 is going to be a very, very big area of previous resistance. And what are we looking out for here, guys? The monthly holds the key for healthcare, in my opinion. Monthly uptrend, looking for a monthly higher low for further trend continuation. This is why I put so much emphasis on this yellow line. 147, it lines up as well with the 12 EMA. So as of now, the daily is looking weak. The weekly is also not looking the best for healthcare, but when we focus on the longer term timeframes here, guys, there may be some nice opportunities in healthcare to be had over the next coming weeks in the event we continue these declines. One of my favorite ones to look out for, guys, is UNH. UNH had a good day today, but what are we looking out for here, guys? I want to see a possible further retest of this 550 down to 525 zone. Monthly uptrend, looking for the monthly back test right here. So this is a breakout, retest, and possibly run trade. It's literally following the exact same pattern as its index, the breakout and retest trade. So if ever that presents itself on UNH, I will definitely be picking up a couple shares, maybe even some call options. Moving on to semiconductors now, 0.53% to the upside. Now, a lot of that, of course, guys, is due to just NVIDIA's sheer power. But if you take a look at this list right here, you will see that everything was not so good in semiconductors today. Only NVIDIA, AVGO was flat, so we can't even talk about them. NVIDIA and AMD, your two brightest points in the entire semiconductor market right now. So definitely enough to keep the sector green, but does not show any broad market strength in that sector, at least not today. So the context, once again, is a nice daily uptrend by the bulls. They put in the higher lows last week, and now we are struggling, right? Now we pulled back a lot. The bulls are trying to recover the daily uptrend, right? Rather than just continuing in one clean shot, they're trying to do it in two movements right here. So we'll pay close attention as to how they react to this zone, but keep an eye, guys. I may as well turn this to red because we didn't really get it back in terms of control, right? We broke a bit higher. Now we're lower. We're still struggling with this overhead area of resistance. Now, in the event, guys, that we come lower and we kind of come undone in semiconductors this week and we break the 246 level, that would be daily downtrend confirmed. And unfortunately, at that point, guys, we would be heading into week number 1 of weekly consolidation, or week number 2 if you count the big decline that week, right? So if that happens, guys, if you get the daily downtrend formation, just understand what we're looking for here on the higher time frames, looking for the weekly higher low for possible further trend continuation. And the support on the weekly, guys, is 240 down to about $230 right there. So looking pretty good right now, all things considered. Your longer term bulls still remain in control of that index. Now, moving into IWM Russell. So the Russell down about 1.57% today, really not responding too well at all to the massive increase in yields that we had today, right? We know that the growth sector is highly dependent on these interest rates coming down because this is where they borrow money. They borrow money for the most part at a 5-year term or a 10-year term in the market, right? So a lot of these growth companies need debt to grow their businesses. So it stands to argue when yields come higher, that's just another thing that keeps them back, right? IWM right now is a little bit of a complex trade. There's a lot of different moving parts. On one side, it's a gauge of the risk on sentiment in the markets. And we have been seeing a little bit more risk appetite in the markets because of the fact that the economic data that's been coming out over the past month and a half shows that the economy is fairly stable, the jobs market is fairly stable as well, and inflation is under control. So the bulls are trying to manifest the rally in the small caps as for now, which is kind of measured by the risk on sentiment in the market, right? This is why I look at this index more so than the quality of the names in this index to begin with, right? But as soon as you throw a little red flag in the mix, right? Higher interest rates or a bad economic report, this trade kind of comes undone really quickly, which is why I say for the Russell to truly run the way that everybody wants it to run, like this, right? Smashing through the all-time highs, going into a massive weekly uptrend with no end in sight, you need a green light from all sides. You need green lights from all economic data. You need longer term yields come down as well. So that is just the fact of the matter. It seems like a simple trade, guys, but there's a lot of moving parts behind this trade that sometimes people, even myself, don't think of until they actually happen in front of us, right? So moving on. Now, what is the context for the Russell? It is currently a nice daily uptrend getting rejected at the resistance. This is a very powerful resistance from 2020 and 2021. That being said, they still have control though. Anything at this point above 215, looking for that daily higher low for a possible second or, third, fourth, fifth attempt at breaking this resistance zone, right? So we'll keep an eye. If ever the bears take back too much of this move, all the momentum will be lost and you open the door for a lower high into lower low and unfortunately go into weekly consolidation as well. Now, at the current time, the bulls still have control of the weekly timeframes. We would just be looking for a weekly higher low. Anything above 215, that same level is going to be very crucial for the bulls to protect, because if you lose that level, unfortunately, you lose the weekly uptrend and you might just revisit the lower areas right here, 213 down to 207. So we'll keep an eye on this one day at a time. But my preferred zone for buying this one, guys, is probably down in this lower region. Moving into the Dow Jones right now. So the Dow Jones also coming down off of its all-time high run, 0.8%. Keep a close watch on this guy right here, 42,700. If you break it to the downside without making new highs, you end up in a daily downtrend and you also end up in some weekly consolidation. Same story as the SPY, same story as the QQQs as well. 6 weeks of gorgeous rally. Eventually, you do have to take a little bit of a breather, but the context is still a beautiful weekly uptrend. So in the event they set up that downtrend, you guys need to understand what we're looking for here. Just looking for a weekly higher low for possible further trend continuation. So at this point, anything above 40,000 just should be a very healthy pullback. Keep an eye, the first stop is the 12 EMA at about 41,800. Would not be surprised if the bulls react nicely for a little bit of a support area in that zone. Now, let's move into the question that everybody must be asking themselves if you follow all of these aspects of the market, of course. What exactly is happening with the long-term yields right now? The Federal Reserve literally cut rates. They literally cut rates right here on this day, right back there. They cut rates, and yet the market is up the exact same amount that they cut rates. I thought that when you cut interest rates, yields are supposed to come down. And usually this is true, guys, but you need to understand, once again, the yield trade, the bond trade, right, is a very, very, very complex trade. Extremely complex. There's similar to the Russell, way more complex, but similar. There's a ton of moving parts in this trade, right? Number one is the aspect of speculation. Whether or not traders and Wall Street think that the Federal Reserve is on the correct rate cutting path, whether they're going to slow it down or whether they're going to accelerate it, right? Now, the context of this right here, the end of July, which is where the AI trade kind of started blowing up, big tech started having massive losses right here, culminating into the Black Monday event, right? Bad jobs data, bad manufacturing data, it all unraveled. And that's what really pushed Wall Street to believe that the Fed is going to embark on a quick rate cutting cycle because the economy is starting to come undone. And that lasted for a while, right up until here. And then the Fed cut the rates. And then after they cut the rates, all we've received is good data from the economy and decent data out of company earnings as well. So now all of the fear trade, the recession fear trade, is now being unpriced by Wall Street. And we are literally right where we stand, guys, when the markets were fairly bullish, when we didn't have much inflation back here in July, before everything started unraveling, right? You guys must remember this move on the SPY, right? Everybody remembers that move on the SPY and the QQQs. That was a fear-driven move. The recession narrative was very, very, was very in vogue at that time. So now where do we stand? Well, if we go back on the dates right here, you will see that the midpoint in July is exactly kind of where we were before this drama all started on the yield curve as well, right? Midpoint of July, we were just kind of hovering around the 4.5% mark. So that is one aspect, guys. Another aspect, of course, is a very complex topic in terms of the level of debt that the government holds, the amount of quantitative easing or the tightening that the Fed does as well, right? Who wants to buy our bonds, essentially? Who wants to buy US bonds? So the demand for US bonds abroad, and that has to do also with people's perspectives or people's perceptions about the health of the US debt level right now, right? You may not want to buy 20-year US bonds if you think the US debt level is out of control, unmanageable, and you think it may spiral out of control, which would force the Federal Reserve into a very, very, very tight situation, let's say the least, right? You wouldn't want to buy bonds at 4% if you think you can buy them at 7, 8%, right? Then there's also the question of potentially who's going to win the presidential election. Now, at this current time, depending on which polls you watch, Trump is slightly in the lead. And we know that one of his biggest campaign, one of his biggest campaign points is the fact that he's running off of possible tariffs, right? Sending or implementing tariffs off of products imported from Europe and China as well. And that a lot of specialists say could lead is the key point here, right? Because they don't know for sure, but it could lead to a little bit more inflation because people will be paying higher prices, right? It doesn't necessarily mean that people will be buying more, but they will be paying higher prices, right? So it could come from just natural increases in prices, not necessarily an increase in demand, right? So there's tons and tons and tons, and I can go on. There's a lot more factors here, right? You can also talk about the bond speculators. A lot of very large players, famous players as well, are net short bonds right now. Stanley Druckenmiller is just one of them. I wouldn't be surprised if Bill Ackman is another one of them too, right? And these people go into these trades with billions of dollars. So there's a speculation aspect to this trade as well. Very, very, very complex trade, guys. Extremely complex, and I'll be lying to you if I would tell you that I have the exact answer, right? All we can tell for right now, though, guys, is this move higher is somewhat disproportionate to what the Federal Reserve is trying to achieve. And they do have a few tools to fix this, such as a few mechanisms in which they can control the yield curve, by essentially turning on the money printer and doing quantitative easing again and just buying a crap ton of bonds, right? That'll do it. If you want to stimulate the bond market, well, you have to backstop the bond market, right? But a lot of big institutional traders are hesitant to buy these bonds without the Fed buying them first, right? So a lot of moving parts to this trade, guys, but in terms of the technical analysis to it, well, there's only one thing we can focus on, and that is the price action. We are currently overbought conditions on the 20-year. We are currently overbought conditions on the 10-year as well. In the 20-year, we are coming up on an area of resistance. We're actually in it as well and kind of almost through it. And then we kind of come into the 4.6 range, the 4.7 range. The discrepancy between where the Fed's policy intends to go over the next 12 months and this 20-year yield is getting, by the day, further and further and further apart. This cannot last forever, right? We are in a rate cutting cycle right now. So this move right here, I think, is more speculation than otherwise. And I would not be surprised if we are approaching kind of maximum velocity for the yields quite shortly, right? It's very, very tough for me to say exactly when this is the top, guys, or this is the top, guys, right? But the only thing we can do is look at the price action, understand we're in a rate cutting cycle right now, and that usually these should be trending to the downside ever so slowly. So I would not be surprised if these yields are topping out. As well, there is somewhat of a smoking gun, right? And the fact that usually when you have such a ridiculously quick improvement or price improvement in yields, right? You guys have seen what's happened, right? You can go back to this period in April when things were skyrocketing, right? You can go back to this period last fall, October, September of 2023, when yields have this velocity of upside. Go through equities and see what happens. Here is April, and here is last fall. Usually it's in line also with a market correcting event, right? Usually you have a market correction, but you can see the SPY has not reacted at all to this move in yields. So are equity traders potentially calling the bluff on the bond market, right? Not worried specifically because we know that for the longest time, we're used to usually when yields increase, you're supposed to see a opposite reaction in the stock market. And so far that has not been the case, which is why I always say, guys, correlation is a very fun tool, but it doesn't always work, does it, right? So all of those moving parts, yields possibly topping out soon. Daily overbought conditions, and I didn't mean to do that. Daily overbought conditions, I wouldn't be surprised, and that would also mean a probable bottoming out of the TLT trade, most likely in this 92 to possibly 90 area. Previous big areas of support back here all throughout this most recent year since February, right, has been a big, hotly contested level a lot of different times. I would not be surprised if the bulls react here on the 20-year bonds, daily oversold conditions as well. And so far, we do have a little bit of bullish divergence coming into this area as well. So I would not be surprised if the sudden and very rapid increase in yields is probably coming to an end sometime soon, but we'll keep an eye on it one day at a time, guys. Moving into gold right now. So gold up 0.07%, not looking too bad at all, guys, but very tough for me to buy up here. I'm more of the opinion that we should be waiting for a pullback, guys. We're possibly waiting for the daily higher low into this area right here if you want to have a little bit of trend continuation. But gold is looking good, guys. The bulls are in full control. Daily control, big weekly control as well. And it's just very, very tough for me to buy this trade up here. I need to wait for a little bit of a pullback. It gives us the best risk to reward. But gold is looking absolutely fantastic right now. Moving into the digital gold, Bitcoin pulling back about 2.17% today. It was a lot deeper today. It was almost 3% at one point. And we know that this is the case, right, guys? Huge previous resistance all year so far. So no surprise as to the reason Bitcoin is slightly struggling in this level, right? Very natural, very logical that it's pulling back into the big resistance area. That being said, the bulls are in full control of the daily time frame right here. Beautiful daily uptrend. Looking for the daily higher low. At this point, guys, I'd probably be targeting this little zone right here, right? The whole 64, 65 location where we just pulled out of could be a nice area for the bulls to retest on the downside before possibly embarking on a next leg to attack the all-time highs once more. So I'm currently looking for that pullback, guys, to go shopping on some BITX. Why? Well, because we have the weekly uptrend. This is the first weekly uptrend confirmed since all the way back here. At no point did we have a weekly uptrend this entire past 6-month cycle, except for this time where we have the weekly uptrend. So it stands to argue that any pullbacks into our desired range should be for dip buying opportunities to play for the trend breakout. Look at the MACD, guys. Look at this MACD on the weekly. Looking pretty good, looking like it wants to cross. And even the monthly, guys, this was a monthly bull flag the whole time, consolidating above the previous all-time highs. Big push up, consolidation, monthly bull flag, and now we're possibly looking for that monthly trend continuation. So not looking too bad at all. Now, let's dive into a few big tech names. Before we do that, give me a quick second. Awesome. Sorry about that, guys. So moving into Apple right now. Apple up about 0.63%. Very nice move on Apple, if I do say so myself, guys. Very, very, very close to the all-time highs. Not quite, but very, very close. Now, the daily bulls remain in full control of this chart at this point. Beautiful daily uptrend right now. Daily higher lows are set, and we're looking for the progression of the daily uptrend. Anything above 229.85, looking for the daily higher low for possible further trend continuation. And we also have this previous area of resistance right here. Maybe I should color it to make it more, to make it prettier. Essentially, I'll do it tomorrow. I don't want to take up too much time on this, but you guys understand, right? Prior resistance should be newfound support for the markets. The 12 EMA and the 26 EMA are curling up as well. So Apple does have a good chance at finding support down here, going for the daily uptrend, and that's if they don't do it right away into the tomorrow push. So daily bulls in full control at this point. Weekly bulls looking quite decent as well. Apple is proving to be so resilient, guys, despite the fact that the valuation is very, very high, despite the fact that iPhone 16 sales have largely been a bit disappointing to start off the quarter so far, but we'll get to hear all of that in their company earnings coming up next Thursday. So very, very anxious to hear about Apple, but all in all, the bulls in full control right now. Beautiful weekly uptrend. So even if we lose, guys, even if we lose this daily uptrend right here, right, daily downtrend, well, we have a lot of space, guys. Anything above 221 would just be looking for a weekly higher low for further trend continuation. And then again, we also have this big area of support, those two yellow lines, before we even test this guy down here and the weekly 12 EMA as well. So the bulls are fairly well insulated to the downside, at least for now, looking quite good on Apple. Now moving into AMD. So AMD coming a little bit alive today at the end of the day, right? AMD's been doing a whole lot of nothing in the last 4 days of trading, and this morning started off roughly the same. The bulls were just not able to keep it up. Massive hourly downtrends this entire time, and now we're getting a little bit of a nice bounce to the upside. So if AMD can convert and get the hourly uptrend going tomorrow, we will be looking for a daily bounce. So daily downtrend is clear as day right now, right? And what we're going to be looking for, guys, is the size of the bounce at this point, right? How much in relation to this guy right here can we take back? Take back over 50, 60%, and you're looking good to be able to reset into a daily uptrend. But if you only come up about 25, 30% and we lose this hourly uptrend instantly, well, then the probabilities, guys, of having the flush to the downside are very high. So just keep that in mind. Daily bounce is starting right now, but it's just the first day. We need to see some follow through. That being said, the bulls are playing good defense where they should be, 162 to 155. This green box has been a highly contested area this entire year so far, which is why you see the bulls playing such good defense down here. What are we also looking for on the higher time frames, guys? We are looking this entire daily period of consolidation. We've just been looking for a weekly higher low for possible further weekly continuation, because they do have the weekly uptrend, right? But they need to start playing some defense now, guys. We're coming up to the bottom end. I don't often draw trend lines, guys, because you don't really need them, to be honest with you. You can just follow daily higher highs, higher lows with your who's in control, right? In terms of your horizontal price action, don't really need trend lines that often, but they do help sometimes, right? The bulls need to kick it in gear pretty much right now if they want to maintain this. But my favorite way of playing this, even if we were to break through a little bit lower, favorite way of playing this one is using short puts, because usually we can get significantly below the market for some decent premium. Moving on to Amazon right now. So Amazon looking quite decent today, right? They are protecting the highs as much as they can. The context, I'll remind you, daily downtrend into an engulfing move on the daily. The bulls now are trying to get the daily uptrend back. So we'll keep a close eye. Can they do it? They still have to break through this hotly contested area, guys. 190 down to about 187. We are almost through it right now. And if you break through it, you'll be doing two things. Not only will you be breaking through this resistance, you'll also have the daily uptrend as well. So the bulls not looking too bad on the daily, that's for sure. On the weekly as well, not looking too bad either. Nice weekly uptrend right now when we are trying to go for that third leg of push towards the all-time highs. But just keep in mind, guys, Amazon with their earnings next Thursday as well. So we do still have about 7-8 days of trading left, right? I would not be surprised if Amazon can break this one, but I would also not be surprised if the markets unravel, guys. Big tech can't do this forever, right? If the rest of the markets are not cooperating, expect Amazon to roll over as well. If we roll over beyond 184.69, daily downtrend is underway. And at that point, we'll just be revisiting the lower end of this support range. Call it 180 down to about 178, which is where I would like to pick up a few Amazon positions myself. Moving into Google right now. So Google up about 0.45%, but still Google, guys, in the last 1 month of trading, they have not really done anything. I'm putting a lot of emphasis on this inverse head and shoulders, but obviously this is predicated on the rest of the market cooperating as well. If we get a few more days like this, guys, big tech cannot hold it up on their own. And at that point, you may just see Google lose the levels as well right now. So the key focus for me on Google right now is this whole 162 area. If you lose the 162, unfortunately, daily downtrend is back underway. The bulls are trying their best to go for the daily uptrend right now. They still don't have it in the bag. They're looking okay, but not the best. Overhead resistance, of course, 171 up to about 178. And to the downside, 162 coming into about the 160, which is your 200-day moving average. The weekly is not looking too bad. Weekly downtrend, big engulfing weekly move. So now the bulls are trying, with all of this space they've created, they're trying to set up for the weekly higher low for the possible weekly trend change and start attacking this area of resistance. So I love playing Google down here, guys. If we can revisit the 160s, I would love to make an additional play on Google. Now moving into Meta. So Meta down as well today, and that's been the case for Meta over the course of the last week. But it's perfectly fine, guys. Even though there is the daily downtrend in motion right now, we know what are the bears trying to do, or what are the bulls trying to do actually, right? Because they control the higher time frames. Weekly uptrend looking for the weekly higher lows for possible further trend continuation. So the whole while that this daily downtrend is continuously underway, we know what the bulls are looking for on the weekly, guys. Just looking for the weekly higher low. Anything above 495 is that weekly higher low. And we'll be targeting first area right here, 551 down to about 545. Where we start this trade, this is the breakout, retest, and possibly run trade for Meta. So everything not looking too bad, despite the fact that over the last 2 weeks, Meta has just done a whole lot of nothing, just slowly grinding down. But the context on the higher time frames, guys, is very important. Now, moving on to Microsoft. So Microsoft as well, not doing too much in the past 2 weeks, kind of been a little bit sidelined, right? Big daily downtrend, and now the bulls have been kind of struggling to get any form of momentum going, right? Every time they have a push up and try to push on to a new daily uptrend, they get rejected. And now it's been kind of the same thing. I would pay special attention to this lower level right here. 409 is going to be the key, and also 423. We're kind of trapped in this very, very ugly range of price action. If you break it to the upside, you get the daily uptrend, but you're met very quickly with a big area of resistance, 425 up to about 435. Huge area of resistance for the bulls all throughout this past year. So I would not be surprised if it does prove a little bit challenging here to break through it in one clean shot. Maybe the two-step, right? Something like this, and then the two-step process. And if we break it to the downside, well, you know that, unfortunately, that would be a daily downtrend. And we would be looking to our legacy area. I call it legacy because now it's been almost a year's worth of time, right? Same thing with this resistance. All year, we've been trapped here. Yes, we've had a little bit of a pop through, but for the most part, guys, 75% of the year so far, we've been trapped between this level. And that's okay because Microsoft all while has been improving its fundamentals. There's nothing wrong with sideways consolidation, guys, as long as the company is improving its fundamentals, right? So moving on further, if we crack the 409 level, well, we're heading a little bit lower, guys. Going to be attacking the 405 down to about 390, which is where I would love to pick up an additional leap contract. Leap calls for Microsoft. Love, love, love buying Microsoft in this lower location down there. Now, moving on to Netflix. Netflix, a new all-time high again. So since their earnings, guys, this company is up 12%. So the long-term portfolios with Netflix are doing very, very, very well. And we also closed the swing trade, of course, last week as well. So now, for me, no more swing trade positions in Netflix, only my long-term shares, but very, very happy with the way this one's played out. Obviously, right, the context is blasting through the all-time highs. So now the bulls are in full control of every single time frame, guys. Top down, they control the monthly, beautiful monthly uptrend right now, no red flags. They control the weekly in a significant fashion, right? The higher lows, set prior to earnings. And now they also control the daily as well. So at any point in time, when we start retracing from this move, just gonna be looking for a daily higher low for further trend continuation, possibly, right? So anything pretty much above 678, we'll just be looking for that. And the prior support level, of course, will have to be back in the 730, roughly down about 725. So look, in the event Netflix starts pulling back with the rest of the market, how we react to this zone when we get to it. Now, moving on to NVIDIA. So NVIDIA up 4.14%. If you only looked at NVIDIA today, you would think that the SPY and the QQQs are up 1%, right? But not the case. So brand new all-time high for NVIDIA. Next area of resistance, psychological 150 has to be the mark. At this point in time, guys, the bulls control everything. Top-down analysis again. Monthly, gorgeous uptrend, breaking through the highs, looking quite good. The weekly, beautiful weekly uptrend as well. And the daily as well, the bulls are in absolute full control. So to lose anything, it stands to argue that they would have to lose the daily uptrend first. That being said, any pullback at this current time, looking for a daily higher low, anything above 129, this guy right here, just for a daily higher low for further trend continuation at this point, guys. Now, where it starts to unravel is in the event that either we set up the daily downtrend or we give back this entire move and then set up the daily downtrend. Then you can look for some weekly pullbacks, right? But as long as the bulls control the daily, it is just looking like a very, very beautiful uptrending chart on all the time frames right now. So impossible for me to chase this one all the way up here, guys. The positions would have to been for the breakout, retest, and run. This is the most recent trade that I would have been interested in. But as per now, guys, kind of just sitting on the sidelines. If we do have some more consistent declines here, well, I might be looking to take some positions if we come back down 130 to 126, but I'll keep you guys posted as usual. And now lastly, moving into Tesla, once again, doing absolutely nothing. I'm pretty sure that everybody at this point, guys, retail investors and institutions alike are very hesitant to position for Tesla much before their company earnings coming on after the close on Thursday. So only 2 days of price action left for Tesla, guys. Impossible for me to give you some good guidance in terms of where this one's going to head prior to their earnings, right? The best thing we can do is take a look at your Tesla expected move. So the expected move on Tesla is going to be about 6% up or down, right? So 6% up or down, what could it help us or hurt us with, right? Well, to the downside, 6% to the downside, we know that we're already in a daily downtrend. And 6% more to the downside, guys, would be challenging the lower area of our current support level that we're working into, right? Roughly about 205. But we know Tesla sometimes moves outside of the expected move as well, right? So if that happens, daily downtrend will be maintained and will once again be looking for the bulls to play some defense around the 200 weekly EMA. This is the big area of support for Tesla, guys. 220, 200, a very hotly contested area over roughly the last 3 years worth of trade. So they need to protect this area, guys, the lower 200s with their lives, because if they lose the 201 right here, well, that would be a loss of the weekly uptrend, and you would also lose a lot of weekly moving averages, guys, and it would just not be looking the best for Tesla. At that point, the next levels would be all the way down in the 180s, right? So we'll keep our eyes peeled. And to the upside, of course, well, if we get a 6% bump to the upside, daily uptrend is now confirmed. We start filling the gap from the robo-taxi event, and we start attacking as well the 235 area of resistance and give the bulls a little bit more life here on the weekly time frame, a little bit more space, right? A little bit of breathing room. So we'll take this one day at a time. And obviously, I'll tell you guys if I'm taking any trades after earnings. Probably only if the stock drops after earnings will I be taking some trades. Probably looking to take, if Tesla comes down here, 205, 204, I'll check the premiums, but I might be interested for some 190, 185 short puts. Now, moving on to Palantir right now. So Palantir down about 0.63%, but nothing has changed on this Palantir chart so far. We know the context, guys, is this absolutely massive daily uptrend. Higher lows have been set at the lows of last week, 40.31. Now, few key things to look out for, right? We know that the expectation is for trend continuation to the upside, right? However, in the event that we roll this one over, break last week's lows, start rolling over the daily, that would be the first daily downtrend on Palantir since all the way back here in the later part of August. But that is not such a bad thing, guys, for the daily downtrend rollover, because what would we be looking for? Simply looking for a weekly higher low for possible further trend continuation. So the area that I would be looking out for in the event we do get the rollover on Palantir, healthy consolidation on the weekly, mind you, would be 39 to 38. If we start retesting 39, 38, which was our prior, candle closing all-time high areas in 2020 and 2021, then I might be tempted to make some short put attempts, $36, $35, possibly right around the 12 EMA, and that would be a nice healthy weekly correction. I would not mind playing some short puts in that area for Palantir myself. So we'll take this one day at a time, and in the event it comes down there, I will let you guys know how I'm playing it around this fairly large area of previous support where we sat during the month of September, right? So that's pretty much everything for our daily market recaps, guys. Hopefully you enjoyed that one. Now let's jump into the positions. So if you'll see, guys, I really didn't add any positions. Well, I did add a few positions, but not that many. So number one is going to be the fact that I'm saving all of my buying power, guys, all of it, because this today, even though we were red, right, there was my focus, as you saw the top 5 options plays yesterday, a lot of my focus wanted to be Amazon and Google. I'm looking for these higher conviction, higher quality names while they're still low, right? And today when I was looking through the list of your largest market declines, even though we had some good percentages to the downside, the charts weren't at areas of support. A lot of these names have run a lot, right? If you look at the home builders were down a lot, but I mean, we're still not really close to the areas that I would like to play these names individually, right? They're still very, very, very high in the grand scheme of where we've moved on the weeklies and the monthlies. So even though we had multiple percentage declines on a lot of them, there wasn't that many opportunities that I looked at and was like, you know what? This is like super juicy right now. So I would rather wait for earnings and get some possible big declines into big areas of weekly support and base my trades from there. So I'm saving most of my buying power for the rest of the week. That being said, we did open a few positions that I showed you guys on the top 5 options list yesterday in yesterday's Sunday video. So I'll only be going over the trades that have a little blue dot. This just lets you know that it's a new position in the last 24 hours, right? For the rest of all the trades, I did a very large portfolio recap in last Friday's video. So if you want an explanation as to why I'm holding all these positions, just go to last Friday's video, the last 10-15 minutes of the video. For today, pure wheel strategy plays, right? There's only 2 of them, so nothing fancy today. BITX, $29 puts. I was waiting for the pullback on Bitcoin and using the BITX 2 times leverage. 29 area is right around where I want Bitcoin, guys. It's right around the whole $66,000, $65,000 area, the breakout retest zone that I've been talking about. So I'm looking to play some BITX short puts right there. Only 1 contract. I went a little bit light because if we get further pullback, that's when I'll go a little bit heavier, right? So I went around the $29 strike and I got decently compensated for it. You can say I got over 1%, about 36 cents with a decent margin of error between me and the assignment price. And the second trade is another one that was featured on the top 5 options list. It was Chewy. So Chewy coming down hard today. We wrote the 26.5 puts, 2 contracts for 21 cents. So well above our 0.5% rule with a decent margin of safety. We were looking at Chewy yesterday. The expected move is right where we are now, 27.74. And I wanted the 26.50s down to about 26 in this larger zone of support. So we will see what happens with the Chewy trade over the course of the week, but I like these 2 contracts so far. The third one I'm looking to add to, but did not add to today, is these Berkshire bull call debit spreads. I like this one. I talked to you guys about it earlier in the video, right? The whole breakout, retest of this range and run. So today we clipped into it ever so briefly early on at the midpoint of the day, right? Clipped into it, but I want to get a little bit more. If I get one more day, and I know it's asking a lot from Berkshire because sometimes this one just takes off on us, right? But we are still in an hourly downtrend. If we get one more push down into this location right there, into the lower 461, 460, I'm being very picky with my trades, right? 461, 460, just a little bit lower. I'll add an additional contract and we'll be going for the upside. But as of now, I'm pretty happy with the one. As per everything else, nothing changed. You see a little blue dot here on Intuit because it paid me dividends. Tiny, tiny, tiny little amount of dividends. But other than that, nothing in the portfolio really changed today at all. So I'll keep you guys updated throughout the week if I make any more significant changes. But in the event that you guys want to get all of my trades in real time, we do offer, I do have a Discord service, of course, that I've been talking to you guys for quite some time at this point, right? Where you guys can get all of my trades, every single one of my trades. And so far, they've been fairly good. So if you guys want all of the live trades, the wheel trades, the long dated wheel trades, the shares, the call options, the put options, the leap options, the long-term investment portfolio ideas, my trade ideas, the private market live streams with our members from 9:15 in the morning to 10:15 in the morning, our private videos, and talk to me all throughout the day, ask me your questions about your stocks, your options, anything you want, well, the link to the Discord is always going to be down below in the description, guys, so feel free, and hopefully I will see you in there. And if not, guys, always feel free to click the like button down on the video. Really helps me grow the channel. Also, consider subscribing if you're new. We do these every Monday through Friday after the close, so hope to see you back in another one sometime soon. And lastly, if you have any questions at all, guys, always feel free to leave it down below in the comment section. I'll be answering a ton of your questions tonight. And usually I do get back to you guys within the first 24 hours. So always feel free to ask me any question you would like. Stock question, technical analysis, an options trade, second opinion, anything you want, leave it down below and I'll be happy to answer you guys. So take care. As always, been a heck of a pleasure doing these videos for you guys. And I'll see you tomorrow after the close. Peace.